Is Meta turning GPU investments into the most profitable bet in tech? Because based on their latest results, it sure looks like they're showing the world how you turn massive infrastructure spending into actual business value. In the first quarter, Meta pulled in over $42 billion in revenue, slightly ahead of expectations, but that's not even the most impressive part. The real eye-opener was their guidance for the second quarter, which topped out at $45.5 billion, around 3% higher than analysts were projecting. This tells us one thing loud and clear: Meta's AI and GPU-heavy investments aren't just theoretical, they're translating into better monetization, stronger engagement, and clear returns on capital. And they're not stopping there. They've raised their capital expenditure forecast for 2025 by another $7 billion, now guiding as high as $72 billion in total investment for the year. We're not talking about random side projects. This is focused investment into tools and systems that directly power Facebook, Instagram, and WhatsApp. That means more powerful infrastructure for content ranking, video recommendations, ad delivery, and AI enhancements across the board. And despite that level of spending, Meta is managing its operating expenses with noticeable discipline. They revised their OPEX guidance downward by $1 billion on both the high and low end, showing that they're thinking about efficiency even while building at scale. Total expected operating expenses for 2025 now sit around $113 billion, representing a 17% year-over-year increase if you exclude depreciation and amortization. But let's address the elephant in the room. How is the macro environment actually affecting Meta? They did acknowledge some uncertainty, which is why the revenue guidance range for Q2 is slightly wider than usual. Some advertisers, particularly those based in Asia, have pulled back spending in response to recent policy shifts. But what's impressive is how quickly Meta has been able to reallocate that ad demand into other regions, using its global footprint and strong targeting capabilities. This is where Meta's scale and diversified advertiser base really shine. Even in the face of softening from one region, the machine keeps running, and revenue keeps flowing. That resilience is no accident, it's the result of years of platform refinement, cohort-based ad targeting, and a vertically agnostic auction model that can flex under pressure. If macro conditions continue to be volatile, Meta's system is designed to absorb that shock better than almost any other player in digital advertising. And their product roadmap is a big reason why. Meta isn't just resting on its dominance. They're actively improving the core platforms using GPU-enabled AI enhancements. This includes smarter ranking algorithms, better feed personalization, and more accurate ad targeting, all of which increase both user engagement and return on ad spend. Over the past 6 months, time spent on Facebook has risen 7%, while Instagram is up 6%, driven by AI-driven feed and video recommendations. And those aren't isolated gains. In the US alone, time spent watching video on Meta platforms is up double digits year over year. That's not just more eyeballs, that's more monetizable minutes across their most valuable regions. And they're building the tech stack to monetize it. One example is GEM, their latest ad ranking system that's currently being tested. Early results show a 5% increase in ad conversions and a twofold improvement in efficiency. That means advertisers are not only getting better results, they're getting them faster and at lower cost. They're also integrating new creative tools into Advantage Plus, including AI-generated images, improved video ad optimization, and next-gen attribution models. In one test, these enhancements delivered a 46% increase in incremental conversions compared to traditional ad flows. That's not a marginal upgrade, that's a complete rethink of how digital campaigns are designed and measured. All of this adds up to a flywheel that's accelerating. More user engagement fuels better training data, which powers smarter AI, which improves ads, which drives more revenue, which funds more innovation. It's a virtuous cycle, and Meta is leaning into it hard. Now, let's talk about risk, because no story is one-sided. One area that deserves close attention is Europe, where Meta is negotiating with regulators over the Digital Markets Act. They've warned that if the final rules are too restrictive, it could significantly harm the user experience and impact their European business as early as the third quarter of 2025. Europe currently accounts for around 16% of Meta's total revenue, so any disruption there won't be trivial. Depending on how the situation unfolds, analysts estimate the impact could range from a 1% to 6% hit to 2026 revenue. The company acknowledges that these negotiations are still fluid, and there's a lot of uncertainty, but it's a headline risk that's worth monitoring. Still, even with that caveat, Meta continues to execute on its core vision with remarkable consistency. They're scaling faster, building smarter, and delivering better ROI across nearly every metric that matters. From their AI-driven feed improvements to their advertising platform enhancements, every part of the business is being optimized for performance and durability. And if macro conditions improve, like, say, if international trade tensions ease or inflation settles, Meta is well positioned to capitalize even more. They've already proven they can grow in turbulence. If the environment stabilizes, that could act as rocket fuel. So here's the big takeaway. Meta isn't just reacting to the AI wave, they're engineering the pipeline behind it. They're turning GPUs into real-time business outcomes. They're upgrading the advertising engine of the internet. And they're doing it while keeping one eye on costs and the other on opportunity. The question now isn't whether Meta can keep up with the future. It's whether anyone else can keep up with Meta. If you want to stay ahead of where this is all going, AI, digital ads, global platforms, make sure you hit that like button. Subscribe to the channel. Turn on notifications so you never miss an update like this. Because what Meta is doing right now isn't just impressive, it's the blueprint for what comes next. See you in the next one.